Hi, everybody. Welcome. Thank you for being with us today. We have a lot of moving parts here. We're still going to be trying to do the language interpretation. So even if we don't have any Spanish speakers with us, it's just nice that we'll have a record for the future to share with people. But go ahead, Wes, kick it off.
Oh, okay. I can kind of go over the fact that we have two Spanish interpreters on this call from the Tucson Language Justice Collective today. We're so happy to have Grace and Maria helping us with this. I know people have gotten so much benefit from our Spanish recordings in the past, so we just really appreciate that they're here. But there are some very important instructions that everyone needs to know in order to facilitate the live interpretation. So everyone can see that there's a button at the bottom of your Zoom screen, and it will say either interpretation or English or Spanish. But if you haven't gone and selected your preferred language yet, please hit that button and select your preferred language, and then you will be tuned into that specific channel. So yeah, if you read the instructions on the screen, it will help you kind of navigate that. And again, super happy to have them helping us today. So thank you again to Grace and Maria.
All right, thank you, everyone. Let's see. All right, so we'll just dive right in. We're going to keep the agenda pretty short. We have a quick presentation, and then we're going to try to do a live poll. Hopefully that also goes smoothly. And then we're just really mostly going to listen today. We want to spend a good portion of our time, about an hour, just listening. So we're going to start with our group session guidelines. I think we're disabling the chat until the conversation segment. We'll have 65 minutes for discussions, questions, anecdotes, stories. I mean, really, we want to leave it pretty wide open. But just please keep your comments and questions under 3 minutes, because we still do have quite a few people with us. And this session is going to be most beneficial to people at the beginning stages of planning your casita in terms of your money, financial planning. So we're here today. My name is Sharia Jimenez. I'm with Cuadro. Wes is also helping me out, Wesley Fawcett Cree, with this project. We also have with us our director of the Land Trust, Maggie Amaro Tellez, and Gigi Aldridge, our project developer. And this is a project that's been funded by the Vitalist Health Foundation and the Community Food Bank of Southern Arizona. So thank you, and all of our other partners. Thank you, everyone. So I'm just putting this up real quick to, again, remind us of why we're here, what we're hoping to aim with this project. Increasing number of affordable housing units, generational wealth, mixed income neighborhoods, keeping development in the hands of our community members, neighbors, and family members, and encouraging incremental small-scale development. And we're also, of course, exploring the community land trust model to maximize the impact of this ordinance. Okay, so first I wanted to share our results from we took a survey during our big session where we had, a huge turnout. It was really great. But we can't get into the nitty gritty in those types of meetings, and we can't get the kind of full rich discussion we're hoping to have here. But I did want to share, some of the results, which were really interesting to us. So the first question, we have everything here in Spanish and English. Are you interested in adding a casita? Of course, most of the people who were there said yes, but did most people have one already? The majority do not have one. There is a good portion of people who want to house their family members, which is what we suspected. either their senior relatives or adult child or even grandchildren. Do people have access to financial resources? Again, it was pretty split, but a good majority said no. And then what was also really interesting to us was the high number of people who we suspect are owner builders who are planning on building these projects themselves. So that was the majority, 61%. So that was also really interesting to us. Okay. Oops, did I skip a page? Okay, so again, I'm just resharing some of this that was already presented. Where we're at here in the segment of focus groups we're hoping to host. We're right at the beginning at finance. We'll be going into permitting next, then building, renting, legalizing, and then the land trust model, protect, what we're calling protect. And I say protect because we're really trying to protect affordable units, and that the land trust model is the only tool that we have to do that. So again, that's just where we're at here. So now we'll just jump right into a few slides we have on Casita financing. I will say this is very high level. We're just gonna, we don't have a lot of time again to get into all the details, and really what we're trying to get out of this meeting is figuring out what else we need to provide when we eventually make a curriculum out of this. Again, I'm going to keep it very high level because there's a lot to go into with financing. But this is a start. We're going to look both at financing if you need, a loan from a bank, but we're also going to look at how you can start planning for, well, how much do I need to build a casita? Because that's been a huge hot button that I really want to talk about, because I think there's a very, very wide range of what's possible. So first, I want to start with kind of just going over the basics of how you begin planning for development of any project. You have your hard costs, you have your soft costs. Hard costs are typically, when I start projects, with people, one of the first questions I ask is, what's your budget? And usually the number that people give me is what we consider hard costs. It's usually what people think of as a construction budget. It's just direct labor and materials related to a project. But what people always forget to factor into their budget is all of your soft costs when you start a project, especially a construction project. So those are all the fees, the engineering, the soils report, survey. I've listed, again, a list here of potential soft costs. And those can be anywhere from 10 to 20% of your project on top of, right, what you're thinking in your budget number, in your mind is your budget number. So to stay in your budget, you either have to deduct those soft costs from your budget, or you have to plan for more money. So it's just good to remember that as you're thinking about planning for a project. I mean, in addition, right, most people also want to plan for some contingency, which could be up to 15% of a project, 5 to 15%. But typically most owner builders that I work with end up spending about 30 to 50% more when all is said and done from that original number that they gave me. I mean, it's what tends to happen. People get excited about the projects, they want to make upgrades, and what's interesting to me about construction projects is somehow people always find the money. I don't know how it happens, but people always seem to find the money. And I think it has a lot to do with the fact that also construction projects take time. Most of them are going to happen during a year-long period. And in that time, you're doing a project, you're saving all your extra money to go into the project. So it kind of tends to just naturally work out. But I did kind of put some of that math in here. Giving an example, I get common requests. People tell me, I only have 60,000. What can I build with that? So, again, going through this exercise, at least if your budget was 60,000, we'd have to deduct about 10,000 for all those fees, right? And with the ADUs, the fees get tricky because they really, right now the city is considering an ADU a secondary dwelling, which means you're going to get hit with all the fees. You're going to get hit with a permit fee, a utility meter fee, and an impact fee. So, and with the guest house option, you can actually avoid the utility meter fees and the impact fees. So right now, financially, it's not really advantageous to build to label the project a secondary dwelling unit, or but we'll get into that later also. So the next thing is talking about how budget directly impacts the quality and the size that you can build. So again, this is all just pretty simple math, very rough math, but it helps. It gives you kind of a starting point of what you can expect and plan for. So again, using that example, I want to build a brand new high quality detached casita for 60,000. So again, we just deducted our soft cost. That leaves us 50,000 for a construction budget. So that means that we can only build, oh, sorry, I think this is supposed to be 50,000, but it's 200. So that leaves us around 300 a square foot, or yeah, around divided by 200 a square foot, assuming we're building pretty high quality, gives us 300 square feet. So here's where, again, the rubber meets the road. When you're dealing with a smaller budget, that's where size really comes into play, and where, again, I think that you can meet a wide variety of budgets, but you're just going to start to get smaller as your budget gets smaller, and it's a direct correlation. So here's an example. These are two projects I'm working on. One, we're permitting this larger one as a full-on secondary unit. It's right under 1,000 square feet. But I also have clients who are, who are building the small micro units. This one's around 200 a square feet, for even less, for around 30,000. And they're doing a lot of the work themselves, and they're owner builders. So again, I don't want to ever, there's just a huge range of what's possible. And it really depends on every individual, their budget, how much skills they, construction skills they bring to a project. And so again, I just really want to stress that there's a lot that's possible, depending on what you want to do. So, and I also want to talk about this because in the public process, for getting the ADUs passed, we really focused on this secondary dwelling and these definitions. But in reality, if you type up accessory dwelling units, what you'll get is, there's just so much out there. There's everything from, people selling plans to people selling prefabrication home kits where they'll ship you the parts and you can assemble it yourself. Little houses on wheels, right? There's a whole full spectrum of casita housing, ranging from temporary to permanent and affordable to luxurious. So again, there's just so much that's out there. And I kind of see it as a continuum as well, because on the smaller end, you're going to have, and more affordable end, even things like tough shed conversions I'm seeing all over the place. And a tough shed conversion would be a permanent, right? A temporary project. And if you don't put it on a solid foundation and you keep it under 200 square feet, you don't even have to permit that. So again, depending on people's, needs, budgets, and how quickly they want to do a project, some of these temporary options might be a good fit for you. So I don't want to also eliminate some of those other options from the conversation. Your garage conversions you have, which are going to be a lot more affordable. And then you have there's just so much out there in terms of prefab modular tiny homes. But with these, I would also be aware, because there's often a lot of cost that is not included. Those soft costs we talked about are typically not included in those prefab model homes that they'll ship to you. Usually you have to do a lot of that legwork yourself, get the permits, hire the drafts person. So when you start to factor in the soft cost, sometimes it's kind of a wash whether to go with a prefab unit versus site built. in which case, I'm an advocate for site built just because, again, I think it supports our local builders, our local building economy, and you're going to have something that's a much higher quality product. But at the same time, there's reasons why people might want to choose that option instead. So, so again, there's a lot that's possible. Site built guest houses are going to kind of, I think for most people, still be the more affordable option versus building a full-on secondary unit. You just have a lot more fees if you're choosing to do the ADU. But again, there's reasons why people might want to do that. If you're planning on having long-term renters, for example, you might want those utility meters separated out anyways. You might want to have your own, have your renters on their own separate electrical meter and water meters. So again, it's just really dependent on the individual. So again, I think what we're trying to do also, and in this conversation, figure out, I think there's a lot we can do to try to minimize soft costs and see, and at least ask, city if there's any way that they could, work with people to, maybe reduce permit fees or impact fees or utility fees. And again, we're going to be trying to provide some of that technical assistance with helping with trying to get some pre-approved plans. We're actively looking for additional grant funding, and then we're still, I think, going to have to sort through some of the zoning incentives as we go through this process. So Casita financing options, again, this is just very broad, high level. Obviously, talk to your local lender and see what you pre-qualify for. That's the first place to start. But basically, I kind of have this in order of, as you increase project size and cost and complexity, you're also going to increase your size and complexity of the loan, right? So obviously the best to work with is cash, but who has, $50,000 cash on hand, right? Not very many of us. But for projects in the range of like 5 to 10,000, I think that cash or credit cards could be a viable option, especially for, if it's supplemental. Like I only need an extra $5,000. I have 5,000 now. If I got a credit card with a 0% introductory rate for 18 months or, a special deal, and I could pay that off without a huge interest, maybe that makes sense, right? Like there's lots of creative ways you can use even credit cards, right? Although of course, I'd say for large projects, that's absolutely not ideal, and you're gonna run up against your credit limit anyways. So, but then after that, you have your HELOC, which is your home equity line of credit. Again, I think that makes a lot of sense for projects that are kind of in like the $10,000 to $50,000 range, where, and this is all dependent on, right, how much equity you have in your home. But HELOCs also have caps, so then you get into your refinance options but HELOCs are nice because they don't affect the original loan, and they, and they tend to be very, very low interest rates, like really, really low. So those are nice options again for smaller projects. But when you get into like the 50 to 100,000 range, that's kind of when you really need to start looking at a refinance or cash out refinance. And the loan requirement, then you're changing the terms, right, of your loan. You're basically getting a new loan, pulling out whatever equity you have in your house. And so your payment's going to go up, and so that's a tough one too. I'm seeing more and more, home renovation loans. Those are a special type of construction loan. I actually was looking at one last night that looked really cool. It seemed like it's more suited for casitas or ADUs. But these are, again, generally for larger projects. And then a lot of home renovation loans, they just get more complex because you have to do pay apps, and the bank is paying the contractor and inspecting the work. There's just a lot of steps you have to go through to do that type of loan. So it just gets very complex and cumbersome to use. And then, so for a lot of people, a second mortgage might be, pretty more appealing because you can leave your original loan alone if you already have a low interest rate locked in and you don't want to mess that up. You can pull out a second mortgage. Again, this is great for larger projects. The disadvantage, again, of a second mortgage is now you have a lien on your original, loan. So there's pros and cons with everyone and every option. Obviously your your local lenders are going to be best able to go over all these details and terms with you. But some of the key concepts are, interest rates. You want to look for a good interest rate. That's going to vary. Your home equity, all of these terms are gonna change depending on how much equity you may or may not have in your house. The loan to value ratio is another key one. There's limits as to how much you can borrow relative to the home equity without needing the private mortgage insurance. And typically, 80% of up to 80% of the home equity can be borrowed against without the need for PMI, which is the private mortgage insurance. So you're paying an additional, fee for that PMI if you're borrowing more than that. But either way, almost all loans are cap borrowing at like 90 to 95% of the home equity. The home renovation loans are the only ones that will do what's called it's like the future appraised value. So they'll let you borrow up to the potential, like the future appraised value of the home with the renovation, even though you haven't built it yet. And for those, then you can start to borrow larger amounts if you have like a much bigger project in mind. So again, this is just a quick summary, kind of looking at the pros and cons and kind of arranging all these different options in terms of, size and increasing loan requirements. Again, the more complicated loans are going to be the, more paperwork, more to manage with the renovation loans and the second mortgages. I think I pretty much went over the pros and cons already. So I think we're ready for the live poll. How are we doing okay on time with, are we remember behind already?
No, I mean, I think you're doing great. You
Okay.
packed in a lot of information and I'm excited to go over people's questions, but it would be really helpful to kind of guide our conversation if everyone took a few minutes to do this poll. I am going to put it in the chat, this link in the chat in just a moment. I have to get out of full screen mode here. So yeah, in just a moment, I will have this ready for you.
Yes, and I see Dionisa. Dionisa, is that how you say your name? We will definitely forward you the slides. So we'll send all this out, the recording, everything.
Okay, everyone, I just put in the chat a link that you can click, and it should be very quick, just a few minutes. And yeah, we'll be able to see the results in real time. And this is very important. Everyone's responses will be totally anonymous because we know this can be sensitive information. So there won't be, this app is not keeping a record of what individuals responded what, but it's just going to help us kind of as the Mi Casita project moves along, have a better understanding of where the obstacles exist in casita construction in Tucson. Yeah, so we'll give everyone a few minutes to do that. I'll keep an eye. Thank you, everyone's starting it. I appreciate it. And I know some of you might be calling in on your phones and not able to do it at this time. And just let me know if you'd like to do it at another time, and I'll leave the poll active and I can send you the link so you can do it at a later a later.
I wasn't able to grab the link.
Okay. Did you see it in the chat?
I did.
Okay, one thing you can do is another way in is to type in pollev.com, like pollev.com. And that will
Okay.
take you to a page, and you will just simply type in Mi Casita 327, one word, and that should also take you to the poll.
Let me see.
I can type that in the chat for you too.
Mi casita. What else was it? I'm sorry.
327, all one, no space.
327. Okay. Introduce yourself. Enter. Okay. Okay. I think I got it.
So much. And I can share my screen, Shay, so we can look at the results in real time.
Oh, cool. Perfect. I'm going to stop sharing then.
Yeah, it looks like we just have a few more underway, still to be completed. But then.
I'm sure I screen. Ten questions. Which budget range best reflects here? ¿Cuál es tu presupuesto?
We can hear you. The only,
Oh, I'm sorry.
is that how you, Venecia? How do you say your name?
Yes. Muted. Sorry.
It's
That's
okay.
okay. No, I just didn't want you to say something you didn't want to say.
Thank you.
Okay, and now I'm going to share my screen and we can begin to kind of see the landscape here of, you know, where the sticking points are. This information is super useful to us. And we don't really have to discuss it, but I just wanted to kind of show, especially Shay, to get kind of her head around some of these sticking points. But it looks like, yeah, some sort of glossary and kind of a resource packet of tables is something we want to help develop as a community resource. So it's good to see that people would find that useful. And it looks like a lot of people haven't really started the journey yet, the financing journey yet. Yeah, so most people kind of don't know where they might stand. Okay. Okay, thank you, everyone. I am going to stop sharing my screen and Shay will share again to put our discussion prompts up. And oh, here we go. Stop share. Yeah, so basically the mission of this project is to really help prepare Tucson for kind of the most like owner-led backyard casita development as possible. So kind of having insight into where people are starting this journey is really useful. And so yeah, now we want to open it up to you. Shay, do you want to go over these questions?
Yeah, just really quickly, again, we have them in English and Spanish. So and again, feel free to express in whichever language you prefer, to get the conversation started. But really it just comes down to two basic things. We want to hear about what are the barriers you face regarding accessing financing for your Casita project, and then kind of what tools or resources do you think would be helpful for you to better access financing. So, but again, we're leaving it pretty open, so I'm just ready for anyone really to take the floor. We hope just to listen for the next hour.